All right. While retail traders rush to chase Bitcoin as it surges past $79,000, one of the most powerful leaders in the crypto industry is standing completely still. Bitget CEO Gracy Chen isn't reaching for her wallet to buy this rally. Instead, she is sitting comfortably on a massive position in stablecoins, patiently waiting for Bitcoin to drop by more than $25,000 before making her next move. When an executive running a global exchange handling billions in daily volume says she won't touch Bitcoin until it hits $50,000, the broader market needs to pay close attention. So, the question is, why is an exchange CEO refusing to buy Bitcoin at $79,000? Despite Bitcoin rallying over 20% in a single week to hit $79,000, Gracie Chen remains skeptical that this upward movement marks a permanent exit from broader market downside. During her interview on the Trade Secrets show, Chen explicitly revealed that $50,000 is her personal price target for Bitcoin buyback. She noted that while Bitcoin could theoretically push another $20,000 higher in the near term, she views the current price action with extreme caution. Chen humbled herself by stating she is just an exchange CEO. Right? I'm just an exchange CEO, providing a platform rather than a market profit. Yet, her strategic decision to hold stablecoins speaks louder than any promotional statement could. In my opinion, I find her stance remarkably refreshing and disciplined. In an industry where exchange leaders are usually incentivized to constantly pump market sentiment to boost trading fees, Chen's willingness to openly sit in cash until a potential $25,000 pullback occurs shows high structural discipline. It signals that institutional insiders view short-term rallies as potential liquidity traps rather than the start of a parabolic run. Now, are major market figures bracing for a deep fall to the $40,000? Chen is far from the only high-profile figure predicting significant downside ahead. Transform Ventures founder Michael Turpin voiced similar concerns on Trade Secrets, warning that the market still has substantial pain to endure. Turpin projects that Bitcoin could ultimately plunge up to 66%, right? 66% from its October 2025. There. So let's just highlight this part. And again, Bitcoin could ultimately plunge up to 66% from its October 2025 all-time high of $126,100, which would drag prices down directly into the $40,000. Adding this cautious sentiment, veteran trader Peter Brandt previously highlighted October 4 as a potential timeline encore for Bitcoin to search for an absolute bottom. Now, in my opinion, the convergence of predictions pointing toward $40,000 to $50,000 range isn't just random noise. When you combine Turpin's 66% drawdown math from the $126,100 with Chen's $50,000 target, it paints a clear picture. Macro liquidity conditions and multi-year cycle trends suggest that a retest of fundamental support levels remains highly probable before any durable bull run can establish itself. Now, how does Gracy Chen's background shape her conservative market outlook? To understand why Chen approaches capital management so methodically, one has to look at her track record. At 36 years old, her trajectory spans rigorous academic and entrepreneurial achievements. She studied applied mathematics at the National University of Singapore before earning her MBA from the MIT Sloan School of Management. Right? After producing and hosting financial broadcasts at Phoenix TV in 2014, she went on to found two tech ventures, and that's Accumulus and Reg VR in 2017. Her pivot into crypto was sparked after meetings with billionaires investor Tim Draper and his team. This deep mathematical background eventually carried her from Bitget's managing director in 2022 to becoming its CEO in 2024. Now, in my opinion, her mathematical foundation at NUS and MIT is precisely why she refuses to trade on emotion. Someone trained in applied mathematics evaluates markets through statistical probability and risk-reward ratios rather than fear of missing out. Her decision to wait for $50,000 reflects a calculated probability framework rather than emotional speculation. Now, why is Gracy Chen snobbing meme coins and sticking to Bitcoin, S&P 500, and select DeFi? Despite managing an exchange that lists hundreds of active tokens, Chen keeps her personal portfolio ultra concentrated. The vast majority of her wealth resides in Bitcoin and the S&P 500, while Ethereum and Solana make up less than 1% of her holdings combined. Furthermore, Chen expressed outright disdain for meme coins, asserting that retail investors have been burned too severely to fuel another massive meme coin season. However, she highlighted one clear exception in her altcoin outlook, and that's hyper-liquid or HYPE. She remains bullish on hyperliquid, particularly as President Trump noted that CFTC Chair Mike Selig is actively working on pathways to allow hyperliquid to enter regulated US markets legally. Now, in my opinion, her portfolio allocation offers a harsh reality check for retail investors chasing speculative microcaps. Holding less than 1% in major layer ones like Ethereum and Solana, while completely avoiding meme coins, proves that long-term wealth preservation relies on core macro assets. Her interest in hyperliquid also demonstrates that institutional capital only moves into altcoins that possess real product market fit and regulatory tailwinds. Now, is the $1 million Bitcoin dream dead due to diminishing returns? A prominent industry bulls like Katie Wood and Brian Armstrong have projected Bitcoin reaching $1 million by 2030. Chen remains firmly in the skeptic camp. Alongside analyst Marcus Thielen, Chen doubts the $1 million target is realistic within this decade. Her reasoning stems directly from historical data. Across every 4-year Bitcoin cycle, the ratio between the all-time high and the all-time low continues to diminish. As the asset market cap expands into the trillions, requiring exponentially larger capital inflows to double in price, the percentage gains of each successive cycle naturally compress. In my opinion, the math of diminishing returns is an undeniable reality that many retail investors ignore. Expecting a 10x or 15x multiplier from current levels in a short multi-year window overlooks the sheer volume of global capital required. Chan's assessment aligns with mature asset behavior. Bitcoin is evolving into a macro sovereign reserve asset rather than a speculative rocket ship. And finally, for our overall conclusion, Bitget CEO Gracy Chen's decision to sit out the current rally to $79,000 in favor of a $50,000 buyback target underscores a broader shift toward institutional caution. Supported by predictions from figures like Michael Turpin eyeing the $40,000, Chen's math-driven background, strict portfolio concentration, and rejection of meme coin mania highlight the growing importance of risk management. While short-term rallies can create excitement, the structural reality of diminishing cycle returns suggests that patient capital waiting on the sidelines may ultimately capture the best long-term risk-adjusted opportunities. Alright, and this finally ends our video. Thank you very much for watching and see you on the next one. But if you enjoyed watching this video, then you might just as well check this next recommended video right here.